Hello everyone, friends. In this video, you will learn how to correctly apply Fibonacci levels to a chart, how to find entries with a high win rate using correction levels, and how to exit a trade properly to maximize profit. So what are Fibonacci levels? Fibonacci levels are key levels based on Fibonacci numbers that help determine where a correction may end, that is, a pullback within a trend. These levels are built using the Fibonacci tool. It automatically shows zones where the price may stop its pullback and return toward the main trend direction. Why should you use this tool? Imagine the market is trending. The best moment to enter is at the end of a pullback within the main movement, but how do you determine exactly where the pullback will end? Sometimes the price pulls back to a previous, support or resistance level, and that is a logical entry point. But if there are no clear levels on the chart, it becomes difficult to understand where the pullback might finish, and that's exactly where the Fibonacci tool comes to the rescue. It automatically shows probable zones where the correction may stop. So how do we add and configure the tool? Let's add these Fibonacci levels to our trading panel. Here we need to click on this icon and choose Fibonacci. Next, we have to select the lowest point on the chart and connect it with the highest point. That's how we get a clear trend movement. So we can also extend it slightly to capture more of the trading range. After constructing it, you will see lines of different colors, and the first one is the beginning of the movement, 0%. Then the percentage increases up to 1, meaning up to 100%. In the middle, we can pay attention to the golden zone. The levels below are deep correction levels from 70% to 100%. If it remains above 100%, the movement can be considered a pullback. If the price breaks below 100%, that's already a new downtrend, and the Fibonacci levels need to be drawn again. And what's important is that you should treat Fibonacci levels as support and resistance zones, not as precise lines. How do you use the levels for entering a trade? Do not enter immediately when the price touches the level. You must first wait for confirmation. And remember, if you want to get the most out of your trades, HashHedge can help you. It's a prop trading company that gives you the opportunity to trade with company funds, not your own. 4% per month from $1,000 is $40. 4% per month from $100,000 is $4,000. You're not looking for higher profitability. You need more capital. You pass a simple evaluation, demonstrate your discipline, and get access to an account from $5,000 to $100,000 plus. Earn more, risk less, together with HashHedge. Let's look at some examples. For instance, here's what happens in this trading range. Notice that the price breaks the green line, but there is no continuation of movement here. The price begins to correct and move further downward, and in the next case, we notice that there was a clear breakout of this zone, and therefore we can confidently open a position upward. After that, several green candles break through this resistance level, and all of this together signals that the pullback is over and it's possible to enter a buy. To strengthen the signal, you can combine Fibonacci levels with standard support and resistance levels. For example, here we can highlight these support and resistance levels. We connect the price reversal points, and we get such an upward trading channel. When the price touches these levels and also the Fibonacci levels, we can confidently open in the opposite direction. This trade will be more than reliable. Notice how the price rapidly moves downward from the resistance level and the Fibonacci level. We can also see how the price bounces off this boundary. There is also confirmation for opening a trade upward when the price touches the support level of this trading range and also the lower Fibonacci line. A reaction appears, consolidation, and green candles breaking the level. For more confidence, we can also use an indicator like the MA. It helps determine the trend direction. If the price is below, the trend is downward. Pay attention. When the price is above the MA indicator line, the trend is upward. If the price is below this line, the trend is downward. Everything is simple. And let's also look at a retest that can occur on the chart. Notice how it happens, for example, in this situation. Here we can observe that the price fluctuates from one level to another, and here we see that the price goes for a breakout and afterward it forms a new trading channel, and the resistance level from the previous trading range becomes the support level for the new channel. What is the retest in this case? Here we can confidently open from the lower boundary, and as a result, Fibonacci levels work as support and resistance. Treat them as zones, not lines. Before plotting them, determine the long-term trend. Use the MA indicator to identify trend direction and wait for confirmation. A pattern, engulfing, reaction. Combine Fibonacci with standard levels, and this creates strong entry zones. And let's summarize. The Fibonacci level is a powerful tool that helps accurately determine the end of pullbacks and find entries with a high win rate. If used correctly and combined with trend indicators like the MA, you can build a stable and effective trading system. Also, don't forget about support and resistance levels and retests. If you liked it, leave a like and write which topic to cover next. See you in the next video.